Hey guys, and welcome to the Working Money Channel. So it looks as though the crypto market has finally calmed down a little bit. I mean, we did see a lot of volatility over the last day or so. And so Bitcoin right now trading at about 40,500, guys. You can see after that news from China, Bitcoin did double dip. And what is looking like to be forming a double bottom pattern. We did see Bitcoin go back up to this price point over here of about $43,100. Now it is kind of finding its equilibrium here, trading at about 40,500. So we're going to see some similar patterns on many of the cryptocurrency charts at this moment in time. If I bring up XRP, you guys can see the XRP chart, similar pattern in that regard. Of course, a lot of volatility for XRP. We know when XRP moves, it moves fast. And I don't know if you guys can see down here, this was the wick. And so, I mean, it kind of does almost look like a head and shoulders pattern if you want to look at it that way. But technically, it is a double bottom. So the wick, back up, second wick, moving up, and now XRP finding its equilibrium in and around here. So XRP trading at about $1.12 at the time of the recording of this video. And if I bring XRP up on the 3 hour and throw a Fibonacci here, you guys can see we're just kind of hovering in and around the 0.236. So we did lose a lot of ground. Okay, we were up to the 0.702 before that huge drop for XRP specifically. But again, it's not just XRP, it was the entire crypto market. We came back down to this level down here of about 91 cents. XRP did rebound to about $1.30, now trading in and around $1.12. So we were kind of fighting in and around the $1.20 mark yesterday. Now we're seeing $1.12, $1.13. So we got a battle out of this. And bringing up Bitcoin here as well on the 3 hour, just going to point out this again. Rebounding off this support level for Bitcoin, just below 30,000, I believe. No, on this exchange, we did see a low of about 30,000, not below 30,000. However, there will be different prices on different exchanges. So that's ultimately where the support has been found for Bitcoin, down to 30,000 and then slingshotted right back up to about $40,400 right now, at least at the time of the recording of this video. So we're going to keep an eye on that, guys. I also saw this from the Cryptic Poet. The Fed will release a research paper this summer that explores a USD central bank digital currency. So we are seeing the cryptocurrency narrative change over the course of May. And I'm going to give you guys some more examples in a second, but first, this is breaking news. This just out yesterday. I want to play you guys this clip. Listen to this.
Hey, Tyler, the Federal Reserve announcing it's taking another step at looking at the possibility of issuing a central bank digital currency, saying it's going to issue a paper. And that paper will be issued this summer that will focus on the benefits and risks of a central bank digital currency. The Fed's going to ask for public comment on whether or if it should do this thing and what the risks are. And Chair Powell saying in a video release that the Fed made available along with this statement that this represents the beginning of a thoughtful and deliberative process when it comes to thinking about a central bank digital currency. He does not say, for the record, the Fed has reached a conclusion to issue one. But here's some quick sound from what the chairman released in his video.
We are committed at the Federal Reserve to hearing a wide range of voices on this important issue before making any decision on whether and how to move forward with a U.S. CBDC, taking account of the broader risks and opportunities it could offer.
He also says the CBDC should be designed for general public use and should be a complement, not a replacement for cash. So, Kelly, hard to know exactly how big of a step this is. The Fed has been thinking about issuing a CBDC for quite some time, but now it's going to issue this paper, and that paper will be coming out in the summer.
Paper coming out in the summer. So that was Jerome Powell, if you were paying attention to that clip. He was making a big point to say, not a replacement for cash, but I feel like we should be beyond this by now. I mean, talking about perhaps creating a CBDC for U.S. retail consumers seems a bit behind the 8 ball, don't you think? Anyway, I think this is a very important statement, though, that has been made here on CNBC, and Jerome Powell now coming out and saying, look, the U.S. needs a solution. A CBDC is going to be put in place. It is not going to be a replacement of cash, or replacement for cash, rather. He made a very distinct point about that. But it is going to come down the pipe, and we're going to have meetings, and we're going to be releasing a paper this summer. So how should we be reading into this? Well, guys, I saw this also from Michael at Val5 Links. Gary Gensler said Thursday that federal financial regulation should be ready to bring cases against bad actors in crypto and other emerging technologies. So let me read you guys a little bit of this. The SEC chief, Gary Gensler, said Thursday that federal financial regulators should be ready to bring cases against bad actors in crypto and other emerging technologies. As we continue to stay abreast of those developments, the SEC and FINRA, the Financial Industry Regulatory Authority, should be ready to bring cases involving issues such as crypto, cyber, and fintech. This is what Gensler told FINRA conference attendees. He highlighted investor protection throughout his brief remarks. The statement comes as federal agencies propose upgrades to their crypto monitoring efforts from the IRS, asking businesses to disclose high-value transactions to lawmakers, calling for reviews of crypto-friendly banking policies. So, you guys remember earlier this week I did report on this. The IRS really kind of cracking down on people who aren't paying taxes and realizing, cryptocurrency is something that we still need to kind of be paying attention to if we want all our citizens to be paying, their fair share of taxes. They're worried that people are laundering money through cryptocurrencies and, once you have your money in a cryptocurrency, you can send it anywhere to anyone on planet Earth, and in some cases, very, very difficult to trace. So the quote goes on to say, we need to do whatever we can to ensure that bad actors aren't playing with working family savings and that the rules are enforced aggressively and consistently. He said regulators should be ready to pursue deceptive private funds, accounting fraud, insider trading, and a bevy of other potential regulatory pitfalls rippling through the capital markets. While hardly offering a playbook, Gensler's remarks may bolster the perception that investor protection is a top priority for the Biden administration, especially when it comes to crypto. Investor protection, a top priority. This narrative to me does not sound well, I guess it does kind of sound somewhat aligned to what's going on in the court with Ripple and the SEC. However, I think that, tackling that Ripple issue in court for the SEC, that is something that might have broader implications, of course, for the cryptocurrency space. We are all waiting with bated breath to see what kind of outcome comes out of the court. And, branches of the U.S. government are now just now, it seems, kind of late to the game. As I keep mentioning, just now, it seems that they're really focusing on, okay, where should we put our resources? How should we be regulating this? They said that they didn't want to rush through this and that they wanted to do it right. But it seems a little bit like they're scrambling. I mean, I don't know, maybe that's just my perception of this. If you guys have an opinion, do put it down in the comments section. So I'm going to continue on because there's more here, guys. This from Julia Chatterley. Want calmer cryptocurrency? The best assurance of protection, honestly, is more liquid markets. Now, this is almost an 8-minute interview with Julia Chatterley interviewing Brian Brooks, who used to be at the OCC. And now he is the CEO for Binance US. This is a great interview, a lot of good information in here. I'm not going to play you guys the full 8 minutes, but I am going to play you guys a little clip at the end. But I do suggest you watch the entire thing because it does really give us a good indication of where Brian Brooks, he does come from a regulatory background, where he sees this going and where he is kind of drawing parallels between traditional markets and the cryptocurrency market. This was the last question from the interview, so I'm just going to play this for you guys. Listen to this.
And so if you're going to invest today, you just have to accept in the interim, there's going to be volatility, and it's going to be big volatility.
I think that's right. But what I also think of is I think that regulators and politicians of both political parties are going to recognize that price discovery is a good thing. We need our markets to function better. And the best assurance of investor protection, honestly, is more liquid markets. So if we can have our politicians help by allowing products that bring in more people with more sides of the trade, you'll see less volatility over time. That's kind of inevitable, but we have to get comfortable with the risk tolerance first.
Yes. I mean, it's great that you're now the CEO of Binance US, but oh boy, I feel like we missed you on the regulatory side. But anyway, can't have everything. Brian, thank you for being on the show. Thank you for educating us.
Brian Brooks discusses this idea of price discovery. That will ultimately come as more products come into the market at scale. He talks about this earlier on in the interview, but this is what's going to really kind of put the reins on the crypto market, I think. The wide volatility right now is great because you and I can make tons and tons and tons of money off these wild swings that happen in a relatively short amount of time. But what Brian Brooks is saying is that, the US is slowly finding ways to add more crypto products, derivative products, futures, but we're not seeing that at scale. We are seeing it in a small capacity right now, but not at scale. And once we see this at scale, this is what's really going to tamp down that high volatility. So, guys, we were saying it last bull run, this might be the last hurrah, the Wild West for cryptocurrencies. That said, though, there is still a lot of money looking to get into this market. But I honestly think, even though we do have these institutional custody solutions for cryptocurrency, we aren't seeing the numbers of institutions hop right into the market because they are still concerned about the volatility. And I think when they can see that cryptocurrency behaves like more traditional markets, I think that that will usher in more institutional investors. The market cap right now, let's not forget, is still under $2 trillion. And, that price has fluctuated. It has been over $2 trillion. And, with people getting scared out of the market, retail investors running away, we have seen this market cap fluctuate greatly. But a $2 trillion market cap for a financial asset that we are apparently supposed to see being traded on a global scale is still relatively small. So I'm excited on the one hand that more money is going to be poured into this market. And again, if you listen to more of this interview, Brian Brooks gives us some great insight on how this is going to happen, how the US sees the cryptocurrency space. And of course, we always love Julia Chatterley. Her interviews are always top notch. Over here, I also just wanted to show you guys, they did bring this up on CNN. Where was it? All right, it was over here. Crypto volatility, Julia Chatterley talking about the top cryptocurrencies, Bitcoin, Ethereum, and XRP. And they bring up the statistics here for everyone to see. Bitcoin up 39% year to date, Ethereum up 269%, and XRP up 430% year to date. So this is great. More push on mainstream media, just getting some exposure, more exposure for XRP. All great stuff. I also saw this tweet thread, guys, and this was brought to me by Dodler XRP on Twitter, but it was a tweet thread from Caitlin Long. Now, this is very insightful, and I want to read this to you guys because I want to show you guys how this narrative is playing out with regards to cryptocurrency regulatory clarity in the United States. Caitlin Long, I think, nails it. It's clear a U.S. crypto regulatory crackdown is starting, but I'm optimistic because most of the major players and agencies have spoken already, and the policy is taking shape. It's pay taxes, comply with the laws, and don't take shortcuts, and will enable the innovation. It's not a Bitcoin ban. So she goes on to say, too, a clear chronology. So first, these are all point form bullet points, all right? Fed releases payment system access guidelines. That happened on the 5th of May. SEC warns about Bitcoin futures. That happened on the 11th. Binance, IRS, DOJ story in Bloomberg. That happened on the 13th. IRS article in the Wall Street Journal, which was warning to pay taxes. That happened on the 14th. The FDIC ICE thaws. It issues its first RFI. That happened on the 17th. She continues down here. The OCC says reviewing all prior crypto bank actions. That happened on the 18th. Senate banking chairman warns the OCC to clamp down on trust bank charters. That happened on the 19th. The Treasury Secretary Janet Yellen announces big IRS tax compliance push. That happened just yesterday on the 20th. And now the Fed's Powell plans paper on payment innovation. And I just played you guys that clip at the beginning of this video. That also happened yesterday on the 20th. Caitlin Long goes on to say, spot a pattern. News almost every day. Theme equals compliance. It's pay taxes, comply with laws, and don't take shortcuts. Not a ban. Nothing yet from FinCEN, CFTC, or FTC, and nothing on stablecoins, but pretty much all other DC regulators have now spoken. No shortcuts. Part equals the OCC. The OCC, so no more shortcuts to bank charter Fed access, plus doing a full review of prior OCC crypto actions. Net for now, this could pause big banks' activity that was coming in Bitcoin. And then she talks about the Wyoming SPDI banks were designed to comply with all these announcements, so probably okay. In summary, it might not yet be over, but the pattern is pretty clear. It's a compliance crackdown for sure, but path for responsible innovation in the US does seem to remain open. And to that point there, it sounds like Ripple has an ace up their sleeve. I know they're in court right now, but the CEO of Ripple, Brad Garlinghouse, has gone on the record numerous times stating just that. Ripple is a company that we have always been transparent. We've never been secretive. We've never tried to be secretive. And so, they have always been doing their part. So I think that, once this court case is said and done, this is going to speak volumes for Ripple and XRP, getting that clarity. And again, guys, I do think that this lawsuit is also going to give clarity for many other cryptocurrency projects in the United States that, whether they were kind of on the fence, it's really going to be, I think, a definitive answer. I think we're going to see that definitive answer as to whether these projects can continue the way they're going, or if there's going to be, a crackdown, as Caitlin Long puts it, a crackdown. And that will ultimately determine who will be able to continue in their current form, or who will have to adapt, or who will have to just kind of close up shop because, for whatever reason, there could be a multitude of reasons here. So interesting to note, Caitlin Long concludes this by saying, I missed this part earlier. The Fed fired a warning shot about stablecoins today from Jerome Powell himself. It's consistent with the theme, comply with laws and don't take shortcuts, get fully regulated as a bank and pay the full regulatory freight. And so that Jerome Powell clip earlier on in this video, but also here just from this document. So must our attention to the appropriate regulatory and oversight framework, paying attention to private sector payment innovators who are currently not within the traditional regulatory arrangements applied to banks. Interesting to note here, he mentions private sector payment innovators who are currently not within the traditional regulatory arrangements applied to banks. So Ripple definitely does fit into this category, but Ripple has always been upfront and not just working with American banks without knowing legally if they can or cannot. But this is going to be huge, guys. This is going to be huge. It's at our doorstep, and we've been waiting for months. Some of us have been waiting for years. This is all really great and very insightful. Very insightful tweet thread here by Caitlin Long. So what else do we have, guys? XRP Crypto Wolf posting this. Bank for International Settlements digital currency paper predicts money will be unbundled. So a big paper just came out from the BIS, the Bank for International Settlements, and ultimately, let me go over some of this. So the ongoing digital revolution may lead to fundamental changes to the traditional model of monetary exchange. Digital currencies facilitate instantaneous peer-to-peer transfers in a way that was previously impossible. New currencies that transcend national borders could redefine how payments and user data interact. So currencies that transcend national borders, of course, we're talking about currencies that are going to be utilized in a new framework. XRP would definitely fall under that category. They could affect the nature of currency competition, the architecture of the international monetary system, and the role of government-issued money. Contribution. Okay, the paper discusses the key and economic implications of digital currencies. It discusses how digital currencies could unbundle the traditional roles of money, lead to digital currency areas that cover multiple countries, and move payments away from banks, credit provision towards digital platforms. These changes could influence the transmission of money policy and necessitate the introduction of central bank digital currencies. So the findings: first, digital currencies will unbundle the traditional functions served by money. So what that means is there was a function that money had in the past. And what we're finding now is that so many of these currencies are coming in, and some are good for a store of value, some are good for a medium of exchange, and some are good for other things. And we're going to start to see our money becoming unbundled. So they go on to say, i.e. a store of value, medium of exchange, and unit of account, creating fiercer competition among currencies. So there is going to be a fight among currencies. How to best use any particular currency in any kind of application. Second, digital money issuers will try to differentiate their products, i.e. currency, by rebundling monetary functions with, for example, data gathering and social networking services. In combination with digital connectedness, new currencies could lead to digital currency areas linking to currency to the use of a particular digital network rather than to a specific country. This raises the risk of digitalized dollars, or digital dollarization, in which the national currency is supplanted by the currency of a systemically important digital platform. Third, digital currencies affect the competition between private and public money. Cash could disappear, and payments could center around digital platforms rather than banks. Credit provision. Governments may need to offer CBDCs in order to retain monetary independence. The BIS is realizing that currencies are moving further away from sovereign nations in that traditional sense that we've always known currencies to be, right? The Great British Pound, the US dollar, the Japanese yen, whatever it is. We're moving away from this idea, this notion that currencies are going to be tied to a specific country, and we're going to have more agnostic currencies, and they're going to be playing a role in this financial system. They also see that there is going to be competition between private and public money. It has been famously noted by Mr. Brad Garlinghouse himself that XRP was created to work as a world reserve currency. I wish I had that clip from when Brad Garlinghouse was speaking in Korea from, I believe it was 2018, up here. I don't have it up here right now, but he does actually mention this, and I did do a video about it a few months ago. I'll see if I can find it. I'll link it up here in the top right-hand corner. So, here we have it, guys. The BIS coming out with this new paper. CBDCs obviously going to be looked at, as mentioned by Jerome Powell, and that paper for the United States is going to be coming out this summer. Finally, guys, what do we have? This from XR Patience here retweeting out Chainsaw Jackson's tweet here. Rosie Rios, the train has already left the station. Okay, she was being interviewed on NBC. Listen to this.
What do you think about cryptocurrency as a form of currency?
Well, I think the train's already left the station in terms of cryptocurrency. You may or may not know that I just joined the board of Ripple, and the reason why I chose to join that board, it's, in my opinion, one of the few cryptocurrency options out there that has a credible and legitimate use. So financial institutions use it to settle cross-border payments.
And boom goes the dynamite. The train has already left the station. This coming from Rosie Rios, one of the latest board members to join Ripple. And also, she was a former U.S. treasurer. So, does this speak volumes to you? What does this tell you guys? Especially when we are seeing all this other evidence pile up, all these news pieces, all this, regulatory clarity talk coming from government, and Jerome Powell, saying it's going to be this summer where we explore a U.S. central bank digital currency. Caitlin Long also, just outlining what we've seen so far. And when you put it all together, the narrative just seems to kind of gel. At least it is for me. I don't know about for you guys, but to me, it's all seeming quite obvious. So if we take everything, okay, we take it, we digest it, I think we can get a good sense of where, the future is going for Ripple, for XRP, for cryptocurrencies, the cryptocurrency market. Of course, there is that SEC lawsuit that might still have you guys questioning what's going to happen. Is my XRP safe? Now, I don't know how much stock I want to put into this, but I also saw this on Twitter, guys, from XR Planet. You guys know this is also a riddle. Look at all the capital letters. It spells out Ripple. So this was posted on a 4channel.org board. Of course, it is an anonymous source. It was just posted yesterday by a banker insider, and so it cannot be verified one way or another, but I do want to read this for you because I found this interesting. Next couple of weeks will be life-changing for some. A lot of you are going to make it, while the other half is going to scream and complain. What do I know? Well, hint, hint, I do work for a major bank in the US. Per request from the big dogs upstairs, it is now time to start rolling out the new system, which involves one said currency. I can't tell you what currency this is. I'm doing this for you guys ahead of time and can start doing some DD. I'll give you a hint. It's a crypto that has 3 capital letters. It's fast and cheap, and that's all I'm giving you. Time frame, end of May, mid-June. Now, he does capitalize RIPPL and down here E in this post, which clearly spells out Ripple. Now, again, don't know how much stock I'm going to put into this, but with all the mounting evidence supporting it, what do you guys think? Has the train left the station? Tell me down in the comments, because I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.